Imagine you're in a cabin, on a boat, or in a small town where normal cable internet just doesn't reach. The thing you want is simple. Open your laptop, make a call, watch a video, and not think about the sky above you. SpaceX is trying to make that sky part of the internet. The company is Space Exploration Technologies Corp, better known as SpaceX, and on the market it plans to use the ticker SPCX, the short stock market nickname people type in to find it. On the cursor stocks, this is the question to keep in your head. Is this price tag about SpaceX today, or what investors hope it becomes? This isn't a garage project asking strangers for a first chance. SpaceX was founded in 2002, is led by Elon Musk, and is headquartered in Hawthorne, California. The story built from rockets that could fly again, to spacecraft for NASA, to Starlink satellites that sell internet from orbit. What SpaceX actually does has two big everyday doors. One door is launch. Customers pay SpaceX to put satellites, cargo, and sometimes people into space. The other door is Starlink. Customers pay for internet service that comes through satellites instead of wires in the ground. Same company, two very different money engines. The reason this matters is that space used to feel like something only governments could afford. SpaceX changed the conversation by reusing rockets, which can make launches cheaper and more frequent. Then Starlink turned those launches into its own product, because every satellite it sends up can help sell internet back down on Earth. That cabin-in-the-woods internet thread is the cleanest way to understand Starlink. A customer buys equipment, pays for service, and SpaceX keeps collecting monthly revenue if the connection is useful enough. Launch customers are more like big one-time jobs, while Starlink can look more like a subscription business if people stay connected. Starlink's growth is why investors are paying attention. The service went from about 5 million customers in February 2025 to more than 10 million in February 2026. That's not just a cool space fact. It's the difference between a rocket company with famous launches and a communications business with millions of paying accounts. Now comes the IPO, the moment a private company starts selling pieces of itself on the stock market. SpaceX is set to list on the Nasdaq on June 12, 2026, under SPCX. The offering is set at $135 per share, with 555.6 million shares, raising about $75 billion. That raise is enormous. To make it feel real, SpaceX is trying to raise about 4 times its latest full-year revenue in one stock market event. Companies go public to raise money, give early backers a path to sell later, and become more visible. SpaceX is doing that on a historic scale. At the IPO price, the whole company is valued around $1.77 trillion. That's the kind of price tag usually attached to the biggest technology companies on Earth, not just a business selling launches and satellite internet. So the central question comes back. Is the market pricing today's SpaceX or a much bigger future version? The bull case starts with a flywheel that's easy to follow. SpaceX builds rockets, launches its own Starlink satellites, sells internet through those satellites, and then uses more launches to expand coverage. If that loop keeps working, the cabin connection isn't just a nice product, it's a doorway into a much larger network. But SpaceX doesn't get the field to itself. In satellite internet, Amazon's LEO project, Eutelsat OneWeb, and Viasat all want pieces of the same connectivity market. In launch, Blue Origin, United Launch Alliance, and Rocket Lab are chasing customers too. Competition matters because even great technology has to keep winning contracts. The first reality check is cost. Rockets, satellites, factories, launch sites, and future projects take huge upfront spending before the payoff is clear. That spending has a name: cash burn. How fast a company spends money to stay alive and grow. If growth pauses, the same ambition that excites investors can become the problem. Here's the financial reality. In the latest full year, SpaceX brought in about $18.7 billion of revenue, the money coming in before expenses. But it still lost about $4.9 billion, meaning profit, what's left after the bills are paid, was negative. Revenue is real. The business still has to prove it can keep more of it. This is the part investors will argue about. A roughly $1.77 trillion valuation against $18.7 billion of revenue means investors are paying about 94.5 times sales. That doesn't automatically mean wrong, but it does mean expectations are doing a lot of work. The cabin internet business has to become much bigger than a niche. There's also an ownership detail new investors should understand. Shares are tiny ownership pieces of a company, and when a company sells a lot of new shares, public investors are buying into the story while the company raises cash. That's useful if the cash funds growth, but it also means the stock has to absorb a huge supply. A lockup is a waiting period when early insiders usually can't sell their shares yet. According to reporting on the filing, key holders have longer restrictions, while other pre-IPO holders face a standard 180-day lockup with some staged releases. For a new investor, the point is simple. Future selling pressure can arrive after the debut excitement fades. So what should someone watch after it lists? First, whether Starlink keeps adding paying customers without cutting prices too hard. Second, whether losses shrink instead of grow. Third, whether big launch and government customers keep renewing. Those three signals tell you whether the story is becoming sturdier or just louder. The dream is easy to understand. More rockets, more satellites, better internet in hard-to-reach places, and a company that keeps building markets most people once thought were science fiction. The doubt is just as simple. This IPO asks investors to pay a giant price before the profits have caught up. Bring it back to that cabin connection. If SpaceX can turn hard places into normal internet customers while launches keep feeding the network, the story gets easier to believe. If costs stay heavy and competition catches up, the price tag gets harder to defend. That's the IPO puzzle, not a buy or sell command. And now you can read this IPO story yourself. What SpaceX sells, who needs it, how money comes in, what could go right, and what could break. Drop your take in the comments and follow the cursor stocks for the next big listing in plain conversation. This video is for information and education only, not financial advice.